Thank you so much to the audience for joining us today for the DeFi Summit, Finance Magnates Virtual Summit. Our discussion today will focus on whether or not DeFi will disrupt and enable mainstream alternatives to centralized finance. This session is a little different than your average panel discussion, as it will be held in debate format with two teams, one pro-DeFi and the other a team of skeptics, who will argue their positions on DeFi's contribution to the overall growth of the crypto asset ecosystem from opposing standpoints. It's a pleasure to welcome our debate teams. On the pro side, we have Lex Sokolin, Chief Marketing Officer and Global FinTech Co-Head at Consensus. Lex is a futurist and an entrepreneur working on the next generation of financial services. Lex focuses on emerging digital assets, public and private enterprise blockchain solutions, and decentralized finance and autonomous organizations. Lex, thanks for joining us.
Wonderful to be here. Thank you.
Brilliant. Next, we have Stanley Kulicha, founder and CEO of Aave. Aave is an open source, non-custodial money market protocol. Stanley was studying law at the University of Helsinki when he first got into Ethereum, and he started to explore how it could impact the traditional financial system. Since then, he has made it his mission to create tools for an open, transparent, and equitable financial ecosystem. Stanley, thanks for joining us today.
Thank you. Thanks for having me here.
No, it's a pleasure. And our team of skeptics. So first, we have Stephen Pally, partner at Anderson Kill. Stephen is a seasoned trial lawyer and litigator across a range of areas, including securities litigation. He is a co-chair of Anderson Kill's blockchain and virtual currency group, a cross-disciplinary team of lawyers who specialize in advising software, internet, and fintech companies. Stephen, it's great to have you.
Pleasure to be here. Thanks for having me.
Thanks for coming. And Hen Arad, Chief Operating Officer at Solidus Labs, which is a team of Goldman Sachs veterans who are on a mission to enable safe and regulated crypto markets through tailored compliance and risk monitoring solutions. Hen is the chair of Global Digital Finance Market Integrity Working Group. Thank you for coming.
Pleasure is all mine. Thank you, Tina, and hi, everyone.
Great. So gentlemen, before we kick off, just allow me to set the stage just a little bit around DeFi and where we are today. So DeFi has experienced explosive growth in 2020, and the total US dollar value currently locked in decentralized finance protocols today exceeds about $13.4 billion as of yesterday, according to on-chain data resource DeFi Pulse. The explosive growth has also given rise to ongoing discourse among industry participants around its potential benefits and risks. DeFi's proponents endeavor to disrupt mainstream financial services such as lending, asset trading, payment services via automation operating without a central authority. By removing intermediaries and automating functions, DeFi can provide lower costs, higher degrees of security and privacy, and increased accessibility. The ability to borrow funds, take out loans, and deposit funds into a savings account, for example, without asking for anyone's permission is indeed gaining traction. Crypto.com and Boston Consulting Group recently published a report surmising that regulation and governance has given centralized finance an enormous proportion of the value generated from financial services historically. Whilst DeFi may be perceived as a threat to centralized finance, this report proposed a roadmap for financial leaders to build a new generation of politically and technologically resilient financial solutions that may be more relevant for today's digital economy. We'll discuss this a little bit more today, but due to its level of accessibility, DeFi may enable greater availability of financial services, such as credit and investment opportunities, to people whose access has previously been limited. However, DeFi is a concept still in its infancy and not without risks. So we will get into some of those risks, over-collateralization for borrowers, regulatory risks, and indeed, some of the governance risks and exposing customers to products that may be outside of their area of understanding. But let's hear from you, our debate team. So this is going to be a little bit different in format, as I explained. We will kick off with debate opening statements, and we will limit the opening statement to 2 minutes for each team member. So each one of you will have 2 minutes to go through your opening statements. Then we're going to cover 5 specific debate statements. And we will alternate between each team, with each team providing a response to the debate question that I pose, and the other team providing a rebuttal. Teams will be limited to 4 minutes each for their response and rebuttal. Does that make sense to everybody?
Yes.
Brilliant. All right, so let's kick off with opening statements. Gents, each one of you again has 2 minutes. Let's kick off with the pro DeFi team. Stanley, will DeFi disrupt and enable mainstream alternatives to central finance?
I think in the long term it might. It's very difficult to say exactly what will happen. It really depends on how people will adopt the technology or even use it. But I think from my perspective, where I'm coming from and how I got excited about decentralized finance was mainly about the characteristic that it has. I mean, the properties. So practically what's interesting about decentralized finance, it's quite open in the sense that it's accessible, and also it's transparent, so you can practically see everything that's going on. So when you compare to, let's say, traditional finance is like a black box. So practically it's a combination of different black boxes, and as a consumer, as an investor, or any kind of like a stakeholder from third-party perspective, or as a user, you cannot see what's going on in the traditional finance, and basically that creates a bit of challenge in the sense that you probably don't see like what kind of markets there are and what kind of competition that it can bring. And decentralized finance itself is by default made in a way that you can see all the actions there. And because of its immutable nature, those actions are actually real in the sense that they're not just figures in a database that can be changed, but they're actually values that are in the blockchain and immutable way. And what's cool about decentralized finance, especially from end user perspective or developer's perspective, is that you can participate into this system. So you can be any part of the world and actually build a financial application that could be used in the future by millions of people. So anyone can create the kind of like a next interesting usability application in DeFi. And because it's a internet in the sense, actually you can create any kind of like a one piece of application that it is interacting with anything that is on chain. And I used to build Web2 applications, especially Web2 financial applications, and you didn't have this composability, and it's very difficult to build something that's actually removes a lot of efficiencies in the same way as DeFi is doing today. So I think those are pretty interesting points from my perspective.
Thanks, Danny. Lex, will DeFi disrupt and enable mainstream alternatives to centralized finance? You have
Yeah, I just want to point out that they've got a litigator. They've got a professional litigator on the other side. And, Stania and I went to law school, but they got a litigator. Okay, so it's important to place DeFi in broader economic perspective. The first point is that fintech itself has been kind of a 15-year theme where $200 billion have gone into democratizing finance. And largely what's happened is we have a bunch of digital distribution, and it's a Spotify of CDs in the sense that you're distributing old stuff, old bank accounts, traditional brokerage accounts, and so on. And there's been no revolution in the manufacturing of financial product. And so one of the core things to understand is that decentralized finance is a new chassis for manufacturing, for making financial instruments across asset classes in a composable way, in a digital native way, with digital scarcity, with transparency, with better audit than ever before. And so all the attributes you'd want of a financial ecosystem for making the rails are actually there. And we should be careful not to confuse DeFi as a financial infrastructure with the types of assets and exposures that come out of those machines. So the tokens, the currencies, the derivatives, that's a separate economic question about what people should invest in and what they should hold. And I think we should be very careful and thoughtful about finding value in the infrastructure and then finding interesting alpha in the assets. So.
Brilliant. Thank you, Lex. Okay, let's move over to our skeptics team. And Stephen, let's start with you. Will DeFi disrupt and enable mainstream alternatives to decentralized finance?
So I'd like to begin by saying that while I might be a skeptic, I'm also, I would say I'm a supporter of responsible innovation. So I'm not opposed to the development of new types of, I think what Lex called them was new, basically machines essentially for creating new types of assets. That's interesting. But I'm a skeptic in part because I've been practicing law for a long time. And I would remember in 2006, somebody telling me that they had engineered the risk out of mortgages, right? They'd created a new kind of financial engineering that would basically democratize access to capital and would allow everybody to have money. And I had a discussion with a guy on Wall Street where I had actually spent some time doing real estate litigation back in the Midwest in the early aughts. And I knew something about how foreclosure worked. And he looked at me like I was insane when I asked him what would happen if everybody went into bankruptcy. So my skepticism is the notion that we're going to create things that are risk-free or that don't just move the risk someplace else. Things like, back in the mid-19th century, Wildcat Banks existed all across the United States. And they were called that because there were literally banks in places where there were tumbleweeds and wildcats walking through the streets. The passage of the National Bank Act in the 1860s, the creation of a robust financial regulatory system, and most recently, Dodd-Frank, which was passed in the out of the burning embers of the 2008 financial crisis, reminded us of the need for, I'd say, responsible regulation. So I'm skeptical of much of what I see in the space. Much of it, 95% of it seems to me like people using magical incantations in order to create vast wealth for small numbers of people, using the name decentralization in a perverse and perverted way. It doesn't mean that there isn't something interesting that can come out of this. So I would agree with Lex and with Stani that there's something there. What it is, I don't know yet. I'm sorry I spoke for more than 2 minutes, but yeah. I'm a litigator, so
okay.
Comes
no, that's all right. Ken, how about you? Opening statements, 2 minutes.
Absolutely. And first of all, I'm happy to have the litigator on my side, although if I'm being perfectly honest, obviously there is a debate to be had, but I feel like we're probably more on the same side than we realize. And in that sense, I'm totally with my co-panelist on my side. I'm not a skeptic as much as I'm a pragmatist, and I think the same is true for Solidus Labs and a lot of the people who are working on the compliance and regulation of digital assets, like we. I think it's not a question of whether it will disrupt and affect, to your question, Tina. I think it already is disrupting and affecting purely by providing an alternative and making traditional finance reconsider, and governments as well, reconsider what can be improved. In that sense, the effect is already happening. I'm not sure whether we'll all be paying each other crypto and decentralized platforms in 10 years, but the value of this challenge to existing systems is already in effect and very, very important. I'm also not a skeptic, I'm a pragmatist, because it's not about for or against. It's about balancing the many merits of decentralizations, of decentralized finance and the concept of decentralization with the many risks that it introduces. You could think about decentralized markets. You can compare it to a car. All of us get excited about very fast, or let's say autonomous cars, but we wouldn't want to drive them without knowing that someone verified that we're safe and that we can brake fast enough if we need to. And so really the question is not for or against. The question is, how do we create the right balance between the merits and the risks by, having exactly this kind of conversations we're having right now.
Brilliant. Thank you. Gentlemen, thank you all for your opening statements. We will move into the debate section of our discussion. I will pose a debate statement. I will throw that to one team or the other. As a team, you have 4 minutes to respond. I will leave it with you to decide if you respond together, or if one of you responds for the team, or if you share the time. That is up to you. After the first team has made their response, the alternate team will have 4 minutes for rebuttal. The first debate statement is, decentralizing financial services enables increased and wider access to financial services. I will pose that to the pro team first.
Yeah, I think we can split. I think we both have perspective on this, and I think Alex can definitely start.
Oh, alrighty. Yes, I think we actually, this is in some ways an easy question to answer because we can answer it in a practical way. Has DeFi enabled wider access to financial services? MetaMask, a consensus crypto wallet, has over 1 million monthly average users. That 1 million monthly average users hold dozens of different financial instruments or versions thereof in them. So for all intents and purposes, there's 1 million people for whom this has been enabled more broadly. And the interesting part is the geographic footprint of those people, which is wildly different from a Robinhood grinding out order flow to Citadel, or Revolut burning SoftBank capital to lose money on a per customer basis. This is a footprint that's geographically diverse. We see Brazil, we see Asia, we see Europe, we see the United States interacting with many different protocols that do everything from banking, lending, payments, insurance type activities. And this is happening today, so we don't need to project further out. And I'd love to learn from Stani in terms of the Aave protocol, whether there's a similar footprint as well.
Definitely, and I think MetaMask is a good example, like practically how you can actually change your service provider of any kind of like smart contract-based system. So you just change the URL, or practically MetaMask is a connectivity to this internet, as you would have a browser to change your, if you shop for consumer goods, you can go to Amazon, you can go to other place. The same way you can actually do with financial services these days with Web3 technology. I think like in terms of like the Aave protocol, what's interesting for me, especially in terms of like wider access or democratic access, is that when you deposit into Aave, you practically get a tokenized version of your deposit, which is this kind of like interest-bearing tokens. So if you're depositing, let's say, USDC stablecoin, you get in return a USDC stablecoin, which actually algorithmically grows in your wallet balance. And what makes it very cool is that stablecoins are based in USD mostly at this moment. So practically just by having a possession of this interest-bearing stablecoins, you're actually having kind of like permissionless savings account wherever you are, which is very interesting in the sense that if you're living in a country where you have quite substantial inflation in your national currency, or the banking system doesn't allow you to access savings, or for a reason that basically your country situation doesn't provide those services, or basically you're in a demographic that isn't supported by the banking system. So I definitely think that's quite interesting thing. And regarding to the actual, if you think about overall decentralized financial systems, such as the Aave protocol, traditionally, let's say, a big amount of the interest rates globally are decided by few people. For example, if you think about Libor, which was practically decided by few persons in a cafeteria in London, to give perspective, and applied globally. In decentralized finance, what's interesting is, and this is not because of the DeFi itself, it can be actually done in traditional finance as well, is that anyone can participate in the governance of these protocols and affect what kind of interest rates eventually will be applied across DeFi. And it's not a decentralized finance specific thing, but it's way easier to do in using smart contracts because of the on-chain voting mechanisms. But I think those things are something that's very close to me, and in terms of like how we can get more wider access to financial services.
Thanks, Danny. Skeptic team, your rebuttal, you have 4 minutes.
So one of the things, I think it was either, I can't remember if it was Stani or Lex, forgive me. One of the things that that was said in an opening was that DeFi removes black boxes. And I would respectfully submit that you're simply substituting one black box for another. So MetaMask is something that's created by consensus. Most of the Ethereum network runs on Infura, as I'm sure folks know, because you know, for speed reasons. Infura went down the other day, and that actually took down because some people in a decentralized, democratized way decided to make changes to the code base, and that took down services for a significant number of people. So I would challenge the notion that we really have decentralization here. We have re-centralization in another to another place. Also, we don't know anything about those. I mean, a million monthly average users, active users, is not an unimpressive statistic, particularly considering that only 12 years ago did Bitcoin make its appearance. So this is in no way to take away from the impressiveness of that stat, but we don't know who those people are. We don't know what percentage of those MAUs were, you know, it could have been that, you know, 80% of them were one person or one company. We simply don't know that. They refer to different wallet addresses. I think what we'll see in the end is that in order for these products to survive, what will happen is they will necessarily become regulated in order to protect consumers. And as that happens, it will simply become another kind of financial product, which is, I think, what we're seeing with crypto on exchanges now. Basically, the notion of regulatory capture, I would say it's happening the other way. Regulators are capturing the asset class, not vice versa. So I'm skeptical that you know, it may be that most of the people using MetaMask are already deeply tied in and connected to the infrastructure. You have to have a reasonably sophisticated understanding of the tech to even use the stuff. So the notion that there's any disruption of traditional finance, I think, is questionable, and I don't think there's really much evidence of that. To you, Chen.
Yeah, thank you very much. Thank you, Stephen. And honestly, it's a hard act to follow, but I'll do my best. I mean, first of all, again, to go back to my first point, I agree. I mean, the way I see it, it already has provided wider access, you know, and I think Lex's point about, you know, real numbers on the ground speaks for itself. It's still, I also agree with Stephen, you know, limited. I think though that, but in that sense, I do believe that it can provide more accessibility. But I think, again, the question here goes back to balancing merits versus risks. And this is a prime example, right? The question of accessibility. Obviously, there's need for more access to financial markets globally, also on a local level. You know, some people could argue, and this is a great, and there are amazing use cases in this space specifically for this. You know, however, I think that, like, when you speak about accessibility to capital markets specifically, there are also examples of completely decentralized, not even crypto platforms that do that well. So there is a question of how can decentralized finance, how DeFi can do it better. I will say that there's also a question of what does accessible mean, right? Because if a platform can be used from anywhere and is not, you know, and doesn't have to be regulated in a way that limits the accessibility for a lot of people, which is some of the issues with the traditional markets, but at the same time, the average person can't use it because it's too tech savvy, or you know, it's accessible from anywhere, but the average user will be easily manipulated by more savvy actors. You know, is that real accessibility? Again, I think that this sector of the market, the DeFi, already demonstrated that it can add accessibility, but there's a lot of risks here that need to be mitigated, you know, through you know, additional regulation that is developed with the industry and tailored tools, you know, like what we do with some of our clients. And I'll stop here 8 seconds after 4 minutes.
I just want to add, I mean, it seems to me
Your
like,
time is up.
Can I just say one thing to add to this?
Okay, 30 seconds.
I would say, I think it's important not to elide the distinction between an interesting experimental technology and something that isn't really disruptive in a major way yet. One can appreciate the experimental benefit of something without saying that, you know, the YAM token and rug pulls are somehow useful disruption.
Okay.
Tina, you're doing better than Chris
Strong
Waller.
man.
You have time at the end for your closing statements.
There you go.
So, all right, we're going to move on to debate statement number 2. DeFi token launches are offered fair and transparently. I am going to start with the skeptic team. Ken, if you want to start us off, you have 4 minutes.
Sure, I was hoping you'll pick Stephen for that, but
No, either way.
Go ahead, Ken.
But I'll get us going. So look, I think that it's a very broad question, and ultimately the answer is, you know, it depends on the you know, the different launch, the different token, and how it was offered. You know, if you look at centralized digital assets and centralized finance, then, you know, especially after the you know, the BitMEX charges, you know, by the CFTC about a month ago. I think it's very important for, and that's what we tell a lot of the increasing number of decentralized finance that approach us in order to understand how they can work towards compliance and making sure that they're bridged with regulators. It's a lot of it is about intent, and if you'll be able to demonstrate that you did your best, and, you know, really invested in offering a you know, a transparent mechanism for your launch, then you're going to be in a much better place, even if regulation is not clear. You know, what was interesting about the BitMEX charges was that it went all the way back to 2014, right? So I think it's clear, you know, I'm speaking about it from kind of the challenges that our clients and partners present to us when they're thinking about launching, and what's the best way to do it. You know, it's not going to be 100% clear in the near time future. Regulation is still in the works, but the best thing you can do, and we advise our client, is to put systems in place as best as you can, to just demonstrate intent. And that's true, you know, obviously from the regulatory perspective, but also very much from, you know, the way you'll be more inviting to, you know, to mainstream, maybe even in future institutional adoption, investors when you launch a DeFi token. So bottom line, it really depends on the specific launch. There are some that I think, you know, do incredible job in providing transparency and very clear guidelines, and other cases where they're less. And, you know, I believe that ultimately the ones that are transparent are the ones who are going to prevail and do better, just because daylight is the best disinfectant.
Yeah, I mean, to me, it comes back to the notion of black boxes. I think you're substituting one black box for another black box. The problem is that fair and transparent in the context of DeFi token launches is ad hoc. And you know, it depends certainly on the launch. I would say for the most part, in my cynical view, most of these things are created for short-term gain for a limited number of participants. The term rug pull is an interesting term that comes out of DeFi. And all you have to do is look at the red and the green lines on the charts to see that most of these things are created as pump and dump schemes. And the ones that are not are backed by big VC funds who want to 10x on the back of consumer bag holders. So I'm skeptical that most of these things are financial products that are sketchy. I don't think fair and transparent applies to most of them. It's basically, it's gambling, essentially, which is an normative statement, by the way. If you want to gamble, I don't really care. It's more, in my mind, it's a statement of fact.
You know, and I'm not sure how much, do we have 10 more seconds?
30 seconds?
30 seconds, all right. No, yeah, so, you know, I'll just add to that. I agree, at the end of the day, you know, it's not about being skeptic, it's about prove to us that you're transparent and that you're real, and, you know, provide all the information you need in order to make the right decision. And I think that it's, you know, tagging to Stephen's point, the ICO, you know, bubble provides the best example for why transparency and due diligence and, you know, an actual meat, you know, in projects is critical. And I think that at this point, investors and the market in general knows that well enough to also make the right decisions when choosing the right decentralized projects to back.
Okay, so your rebuttal from the pro DeFi team. DeFi token launches are offered fair and transparently?
Stani, you probably should go first, given your token launch experience.
Yeah, I think it's a really interesting question, because I've seen, like, over the years, the kind of like token launches and, well, token distributions in different perspectives. I think I was still actually in law school when I started to get engaged more into Ethereum community, and also with the building decentralized financial applications. And one of the things I kind of noticed, even though I had a previous startup experience, is that the technologies that we have, let's say decentralized finance or blockchain in general, are quite pioneering, in the sense that, if you have any kind of fundraising, it's very risky, in the sense that it's quite new technology and it's very difficult to get funding. And I come from a very small country, Finland, which is in the Nordics, and raising funds there from venture capital is very, very, very difficult, especially if you are in blockchain. So in terms of VC funding, it's very difficult, and it would have been impossible to raise funds. And practically our token sale was a way democratically raise funds globally, something that could be considered as private placement style of fundraising, and that basically helped to build Aave what it is today, and basically one of the biggest protocols out there. I definitely agree with this statement that basically DeFi might be gambling to some extent, because all of the finance is gambling. If you're taking risk on any kind of parts, you always if you're chasing profits and yields, you always have the risk aspect. It's up to you then to choose what state of the risk you take. One of the issues with decentralized finance and overall in finance is that kind of like you have to send some sort of restrictions or educational content for the end users to understand what kind of risk they're taking. And some of the participants in DeFi or finance are not following that path. And then we will see kind of like bad apples, but most of the apples are pretty good. And that is why we're pushing the technology forward. I think those are like my perspective. I think Lex has more. I give the to my co-counsel.
It's some unlicensed legal advice, everybody. So first off, just a comment about, we can be collectively angry at the internet for being mysterious and full of lies and conspiracy theories. 60% of internet traffic is false. Therefore, the internet is a scam and we should turn it off and regulate it away. 20% of Twitter, is bots spreading misinformation. Therefore, nothing good has ever come from Twitter. So there's a little bit of this sort of like absurd conclusion that comes out of observing the poor behavior of early stage speculators and actors. And that absurd conclusion is that these symptoms of falsehood and sort of like the general qualities of the web are somehow special or representative or reflect on a better new financial infrastructure. I think the two other points. The first is that tokens. So number one, for regulated for investments and securities, right, which are quite different from token launches per se. For regulated investments and securities, there is a trend where people hold assets far more directly and do not need to be intermediated as much anyway. And so you can see a lot of Silicon Valley companies doing direct placements rather than doing an IPO through a banker. So there's a broader trend of enabling people to just hold securities. And you can talk about crowdfunding, Jobs Act. And so there's just a straight line towards people actually holding digital assets in their wallet, which has, separate from token launches. Second, token launches, which are not equities, but are part of participating in a software like a video game or some other system where you earn the tokens for doing stuff. That's a super compelling and different and more fair distribution mechanism. So for example, by using the Aave protocol and getting a reward for that use, or by using Filecoin and getting a reward for providing hosting, that's actually stuff I do. And it's fair to receive a reward for the things that I do, which is quite different from, for example, Goldman Sachs running an IPO process where only institutional investors can participate.
Okay. Thank you, Lex. We're going to move on to DeFi statement, debate statement number 3. DeFi yields are sustainable and give customers more opportunities to increase wealth creation. I'll pose that first to the pro team.
Yeah, I give that Lex just were mentioned. I mean, I can start by saying that I think we're categorizing DeFi too much in the sense that decentralized finance is just finance in the sense that traditional finance is. So practically you have yield opportunities that might be short-sighted, some are mid-sighted, some are actually sustainable and quite interesting for the long term. So what decentralized finance does, it really removes substantial amounts of barriers and lets people to innovate. And when people are innovating, it practically means that they're reducing inefficiencies in the financial system. And there's inefficiencies because most of the finance is based on very old technology, which is new technology compared to what we had, let's say, 100 years ago. But today's financial technology, even in the sector of fintech, isn't that actually frontier technology in terms of finance. And when we have innovation, it creates new opportunities and it creates yields because the inefficiencies are removed. And also because it creates a global liquidity markets that brings a lot of traction there. And I think overall, these opportunities are something that is practically available in short term, but over the time, as those products are getting more popular and liquidity comes, the yields will flatten to something that is more sustainable. The rates might not be very attractive, but they're better rates that might be in the traditional finance. And it's not guaranteed. Rates always depends on the market movements. It might be at some point that traditional finance might have better rates. Sometimes it might be that decentralized finance has sustainable rates. It really depends on the market movements. But what DeFi does, it removes inefficiencies, and when that thing happens, it basically translates into bigger yield opportunities. And I think it's all about the diversification of opportunities in the sense that it always serves the end user if it's done very safely and securely. So I can't calculate anything that is not safe and secure, whether it's DeFi or traditional finance.
Have I got 30 seconds?
A minute and 30 seconds.
Minute and 30 seconds, great. So sustainable and yield are both words that I think merit like deeper definition within the question. I think the sort of like the practice of yield farming, where you're rewarding folks with participatory tokens as a practice that may be sustainable in driving usage or adoption, but that's not kind of the core alpha of the space. You know, and when PayPal launched in the 90s, the first thing it did was give $100 to every new user. Yeah. So, you know, I'm not going to complain about PayPal, the $400 billion company. So when you look at yields in DeFi, there's two things that they create exposure to. There's their interest, and there are two different things that the interest comes from. The first is the equivalent of a capital margin desk, which clears the demand for leverage. You know, so you go to Goldman Sachs, you want to borrow Apple to go long or short, you pay an interest rate. Similarly, in DeFi, there are these machines which clear an interest rate for leverage for some particular markets. So if you believe that there will be more types of assets rather than less in DeFi, you will get more and more of these markets, which will generate interest rates, right? I want to go along a painting that is on the blockchain or something like that, and I want to go short ETH. And then number two is for providing capital as a market maker. Citadel does a good job of this, earning $4 billion a quarter, I believe. And so there's plenty of room for market makers to generate cash flow and then distribute that to the pools of capital that are inside. And that's the second source of interest. And so in both of those cases, I think those are just regular financial functions that happen to be cloaked a little bit in DeFi by magic words, but are nonetheless these timeless things that people do.
Thanks, Lex. Team Skeptic, your rebuttal.
I think that was actually, I like what Lex just said about sort of traditional financial markets functions being provided by this new technology, but being, I think, sort of cloaked in the language of decentralization. It seems to me that in order to make money using something like Uniswap and yield farming, you have to have a fairly sophisticated understanding of finance and technology, more than your average consumer. So I don't see this technology, interesting as it may or may not be, creating broader opportunity in the near term for consumers writ large to have opportunity to make money. I also think, to Stani's point, as the technology, if the technology becomes more normalized, the opportunity for yield is going to decrease, right? The massive yield is a function of volatility. And the volatility is because, in part, you know, very few people understand how this works. And it's highly manipulated with spoofing, wash trading, Telegram pump and dump groups. So I think you're going to see yield go down if this is to persist. And you'll also see this technology being used perhaps in interesting ways by traditional capital market providers, but I don't see it as a democratization. Also, I'd like to say, I mean, what's interesting to me about this space is not the continued creation of new financial tools, derivatives, things like that. It's actually stuff that we're not talking about. So I'm curious, I know this isn't the topic, but maybe this can be addressed at some point. I'm curious what use there is for DeFi outside of, you know, alpha financial products. Is there anything else there?
You have 2 minutes remaining.
So I'm actually happy to hear the answer to Stephen's question, if we want to use the time right now, because he covered most of it.
Well, you can defer your 2 minutes to Lex or Stanley, and they can answer the question.
All right, so I'll say a couple of words and then I'll defer it because I would love to hear the answer.
Now lost 30 seconds, so
right.
do you want to answer or not?
Perfect. Anyway, I think that to the question, I mean, it is a nascent space, and it makes sense that things are not going to be stable. I do think that there are examples for relatively sustainable ways to make regular yield. I think lending provides a lot of those examples, but I agree that it's early, which is also why it's not necessarily you know, a bad thing that there are airdrops, and I think Lex's PayPal example is right on the spot. But yeah, other than that, I'd love to hear the answer to Stephen's question about other use cases, if you guys want to use that time.
Lex or Stanley, do you have a minute? Do you have an answer to Steve's question about what use cases do we have for DeFi outside of financial services?
Yeah, so I'm sure Stani's got actual examples, given that he's got a protocol that he shepherds. I do want to say that, like, this quote unquote just finance framing is a bit of a straw man as well. Like, just finance is 20% of global GDP, which is 6 trillion per year. And so if we were to reform just finance and create infrastructure that's interoperable between payments, money movement, banking, equities, fixed income, venture capital, retirement, insurance, and put it all on mutualized rails that were globally accessible and that were composable and software first, I think that is trillions of value creation. And Ethereum happens to be this digital property rights infrastructure, which is not just a computing system, but also an economic system. So I think it would be a fantastic outcome, even if it is primarily economic. Stani?
Yeah, I think value transfer, and also kind of like value representation on chain is quite interesting in the sense that kind of like now many of the, let's say, ERC20 tokens, they're practically governance tokens or representation of, let's say, some other, let's say, wrapped Bitcoin or wrapped Filecoin on Ethereum. But I could imagine in more as we go along in the future, or actually even probably I missed the most tokenized thing now, it's US dollars, USDC and so forth. But what's interesting, like as we start to tokenize more of this value and create practically a suitable custodian network and whatnot, and get this value in cryptographic form into decentralized finance, it allows quite interesting opportunities, and not just kind of like value that we always have had a price tag, but of course like value that has been always subjective, for example, for me, and it might be like valuable for maybe 10 to 20 to 30 other persons globally, but not more than that. And having that value and using it in the DeFi space is pretty interesting. But also what I like about on-chain economy is that it's not only about DeFi, but you have this kind of like an internet of things that you can do, and it's on smart contracts. So we have in one ecosystem project called Avegotchi, and basically their goal is to reward NFTs to users that are saving funds on Aave. So the more you're saving, the more you get rewarded, and you can unlock this collectible NFTs, and that's pretty amazing. So there is a lot of things you can actually do and combine, and I could imagine in the future practically that you could sell products as a not as a manufacturer, but let's say a person that makes small batches of clothes, small batches of anything. You could actually sell your vision and your designs, and then fundraise in the sense that you could actually buy the kind of like the things that you need to make those goods, and then deliver to your audience. It can be music, it can be anything. And DeFi is just one of the things that is empowering those other industries in the same way as in traditional finance. So that could be a pretty cool value proposition. But to go to that stage, it really takes time and to mature. And maturing means security and also kind of like a risk control and risk assessment. So most of the stuff that we do at Aave and in the governance in general is practically assessing risk and thinking like what kind of things could be used as lending currencies and what could be used as collateral currencies. Sorry to take a bit time to explain.
Thanks very much for that short explanation. In the interest of time, I'm going to combine our last two debate statements and make them essentially one. They both cover, similar sides of the same coin. I'll pose this first to the skeptic team. DeFi governance mechanisms provide adequate customer protections, and decentralized in its nature, DeFi falls outside of regulatory perimeters.
That is an absurd statement, and obviously just completely untrue. And I'd be surprised if the other side agrees with this either. Thank you for lobbing the softball. These are black boxes, and I would say too, having spent years representing companies, and I'll just give you an example of representing condo associations where you have many people, like having a lot of people loosely involved in something doesn't make governance any easier. Like the hard part of governance is people and personality. The notion that you could take something, you could take something like human governance and reduce it to a couple of lines of code and assure safety and security of people's deposits or investments is ridiculous. And we've seen that in the short period of time in which crypto has existed. We've seen this concept belied multiple times. Regulators always come around too. So if you're doing something that involves raising money in a way that involves an investment contract, eventually securities regulators are going to see it. If you're involved in money transmission, eventually regulators are going to see that, come around and understand it. I don't think that the CFPB, assuming it still continues to have teeth or exists, is going to stand by idly while consumers are chiseled out of their money with usurious interest rates. And again, like I come back to something really simple, which is Ethereum, for most people, running on Infura, which is a centralized database that is created and controlled by consensus. Not a criticism, by the way. It's a statement of fact, and that collapsing removing access for people to their assets. So no, I would say there's nothing that exists outside of regulatory parameters. You can say that it is, but it never will be if a regulator decides otherwise. And I don't think that these false governance mechanisms can provide adequate consumer protections just because people say they do. It's silly.
You have 2 minutes remaining.
All right. So, first of all, I agree. I think it's to ask whether it falls under regulatory parameters or not is a bit of an absurd question, but I'll get to it. Look, the bottom line, and we really deal in our work with clients, our specialty is detecting market manipulation in crypto markets. So we really deal with the new challenges created by this tech for risk monitoring. The bottom line is that these are markets that are rooted in fundamentally more complex technology, and that creates and more complex markets create more opportunities for manipulation. Spoofing and wash trading and the kind of stuff that Stephen mentioned earlier, which we know from traditional markets, and also new forms of manipulation that we are just getting to know, right? In that sense, the question of governance mechanisms, my answer would be no. There's not enough protections yet, but not necessarily out of trying to run away from protections, but just as a naturally evolving market. And as evidence, there's a study by CipherTrace that just came yesterday that showed that, at least in terms of hacks and on-chain analytics, there's a decrease in general crime in the crypto space, but there's an increase specifically within the DeFi sector. It's now 20% of all crime within that report, at least, comes from decentralized finance. We're discovering new forms of typologies all the time, from block level manipulation from block level manipulation, block level front running to more, to just new ways to manifest wash trading that are enabled by the base of decentralized markets. But it's also important to say there's an opportunity here to take advantage of the technology in order to address some things on a fundamental level. I'll conclude by just saying that the BitMEX indictments, charges, again, made it really, really clear that everyone is going to have to deal with regulation in one way or another, even if it doesn't look like right now you're under regulatory perimeters based on what you're doing. We just did a fireside chat with Commissioner Berkovitz of the CFTC about a month ago, and one of the key things that he said, of course, the question of DeFi came up, was, yes, we're used to dealing with intermediaries, but the fact that there are no intermediaries doesn't mean that we're not going to find someone who's responsible if there are offenses against, in this case, American investors. We are feeling the fact that the DeFi space gets this. We get more and more companies trying to reach out to collaborate with us. And I think that those protections and the ability to deal with regulation, are going to be increasingly developed, and kind of catch up at some point with the fact that they're already doing better in centralized crypto markets.
Thanks, Chen. Thanks. The Pro DeFi team, your rebuttal.
Well, I can quickly say that basically, not to confuse the audience, I definitely disagree that DeFi is not a black box. So it's practically opposite of black box. So I think what the opposing councils were referring to is the connectivity into the Web3, let's say Ethereum network. The same way as you need connectivity into internet, practically you need a connectivity to the Web3. So decentralized finance itself is not a black box. Everything is open there. You can see today, if you go into Aave, you can see every single transaction, what's happening there, every single interest rate that is paid, what is the interest rate curves used there, and you can see the solvency of the protocol. If you go to the website of, let's say, JP Morgan, you will not see the same solvency level there. I hope they are solvent. So, and this leads back all the way to the 2008. So basically, when you start to actually create different kinds of financial products, complex or not, but if you can't see what's happening, actually, how much everyone is having exposure in the financial systems, you might have risk that basically doesn't hold when something happens in the market in general. And the cool thing about decentralized finance is that when everything is public and transparently out there and auditable by anyone, which is the key point, is that you can actually quantify those risks. And I think that's the kind of like a next step where DeFi needs to work. So we need more tools in terms of risk and assessing those kind of risks. Whether like governance provides like good protection, I think governance provides accessibility to decide on different kind of like, let's say, risk parameters. But eventually, the protection, it really depends on kind of like how much effort is put into those, the same way as into the risk tools. So those are things that can be built on top of DeFi. And I think that the black box example is a good one of the kind of like a misconception, because the DeFi layer itself is practically open, and you can build any kind of like protection on top of that. You can build services that take custody of the funds and actually are regulated businesses, the same way as Coinbase is regulated for, let's say, electronic money activities in Europe. The same way there could be a entity that is providing DeFi services and taking custody of user funds and leveraging DeFi. And I think definitely I agree with the opposing parties that practically nothing lives outside of regulation, so nothing lives in a vacuum in that sense. So everything is kind of like intact. But I also would say that where Bitcoin or Ethereum is decentralized, some of the protocols are equally decentralized in that sense. But there's certainly some parts that has to be regulated, especially to guarantee those kind of like protections.
You have 45 seconds remaining.
So there's been a number of miscategorizations made about Infura, and I recommend the listeners to check out infura.io and the blog, and in particular, a correct categorization of what actually occurred. Separately from that, I think DeFi infrastructure and blockchain infrastructure more generally is a far better starting point for regulation and customer protection than anything that's come before. And so you have full transparency, full scarcity, you can calculate exposure. These are all mathematically complete functions that you can actually enable regulators to do their job in a more efficient and holistic way. 2008 would have looked very different if it was all derivatives on a DeFi protocol. We would have known immediately what the exposure was, rather than winding down Lehman for 10 years. The final thing is, should we advocate for newspapers or the internet? If we had our way and we bounded all our regulation to countries and disallowed interoperability of media because, oh no, what if somebody in our country is exposed to a media organization in another country? We'd never have the rails of the web. And I think DeFi is a global financial system. And so regulation will have to fundamentally change rather than be the sort of sovereign prison for enabling people to achieve their financial best, and instead be a global web that is really beyond what we have in place. And I think it's a push and pull to make that happen.
Thanks, Lex. Okay, that concludes our debate section. I have left a minute for each of you to make closing statements. We're running very close to time, so I'd like you to each keep your closing statement, please, to 1 minute. Stanley, let's start with you.
Well, I think in terms of like decentralized finance, we're all in learning stage. I would say like we all are in a consensus that basically we have technology in the hand that might improve, but I say definitely might, because it requires that people understand what DeFi is all about, what are the benefits. And kind of we kind of get a like as a community, I think we can't guarantee anything where the technology is going. I think the space has been growing quite extensively because it creates opportunities. It allows developers to build financial products, remove inefficiencies, and also access for globally to financial services that might not be available than before. But to basically make decentralized finance successful, we need to consider risk, education, and also regulation, of course. And yeah, that's at least from my part.
Thanks. Hen, your closing statement, please. You have 1 minute.
Absolutely. I will refer to Lex's point about newspapers versus the internet. I mean, I think it's a good one, but I think that the bottom line answer is that, we should advocate for both. And with time, they were able to, they still are working on it, but the New York Times has a website that yields more revenue than the paper itself. And a balance is being found. And the question for DeFi right now is finding that balance between the merit and the risks. I think that the key to that, there are a few keys, that we all kind of, I think, agree on actually. First of all, one of the key paths to growth is regulation. There's a reason people nowhere do people vote for libertarian governments. It doesn't mean that people like having their freedom infringed upon. It means that they like having some set of rules and some promise from, the government that there's supervision there, that they know they can't do themselves. I don't think DeFi necessarily has to go there, but if it won't go there, it won't fulfill its potential to actually provide more accessibility to more people. The key to doing that is, first of all, developing. All right, so very, very quickly, just crypto-specific tools to really help DeFi utilize the technological advances that it has in order to address regulation. And second of all, crypto-specific rules, working with regulators to develop them in standards. Sorry.
Thanks. Stephen, your closing statement, please.
So I think being a skeptic can be really tiresome and boring, right? And I think the danger with too much skepticism is you can miss the signal amongst the noise. So I've spoken a lot about the noise. I'm really interested in the underlying fundamental signal. And to Lex's point about interoperability, I think that's interesting. The question I still have is the thing that I'm still missing, and I've been told by some very, very smart people that there's something here in this experiment of DeFi. I'm trying to tease out what that 5% of signal is from that 95% of noise. To me, it's mostly noise so far, but I think there's something there. Those new financial products, I would say too, if you went back 120 years ago and you looked at the horseless carriage, the car, it did not take off and thrive until we had paved roads and traffic lights. So I think there is an interesting overlap between the development of useful traffic lights and useful roads and useful regulation and the development of interesting disruptive technology. So I'm certainly interested to hear about and to watch what will come next, even though I do have a skeptic's hat.
Thanks very much. Stanley from Aave, Stephen from Anderson Kill, Hen from Solidus Labs, and of course Lex from Consensus. Thank you, gentlemen, so much for joining us today. It's been a pleasure.
Thank you very much.
Thank you.